Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everyone see my screen and hear me? Great. Thank you, Fred. Let's go ahead and get started. All right. So we got a nice move up off of the June lows. And when we extended a little bit more than ideal for a third and now have dropped deeper than ideal for a fourth. Although counting this as 1, 2, 3, 4 and looking for a fifth wave up that maybe gets to at least a nominal higher high or the 4,400 region as wave 1 is still valid. And then we can get another replay of the same move from August into the end of the second half of August as another wave 2. But Garrett and I are seeing a lot of evidence in individual names and sectors, particularly in the tech realm, and we'll talk about that a little bit more when we jump over to the NASDAQ and the QQEW, where this was just ABC up as wave 1 of an ending diagonal. That doesn't mean that it has to be super choppy and overlapping. We can get a lot of nice, clean movement. And then just a little bit of a deeper 4, but maybe stops a little bit shy of actually getting overlap with the top of wave 1. We know that the only difference between a diagonal and an impulse, both have 5 waves, but the subwaves in a diagonal are all ABC moves. Instead of being 5 waves and then an ABC, 5 waves and an ABC, and then 5 waves up, they're all ABC. And the only other difference is that sometimes you don't get quite as much extension as in your third, and then you can get a deeper fourth wave that will sometimes overlap the top of wave 1. It's the only L8 wave pattern where that is allowed. Other than that, there's really not a lot of difference in the way that we're counting these. I know Avi does have a red alternate, more bearish count where this was some sort of a fourth, and this is an A and a B wave and a C wave down to a lower low. I have 2 issues with that, but the biggest issue is not that it's not a valid count, because it's certainly a valid count. To me, it would look a little bit more like 1, 2, 3, 4, and a fifth wave down of a leading diagonal off of a high, and be more indicative of a top of primary wave 5 and not an alt wave 4. The other thing is that a lot of the individual charts and individual sectors that Garrett and I look at and that think are the drivers behind this coming rally and all of the things that agree with our large account on the broad markets that argue for a fifth wave up to new all-time highs really cannot tolerate getting a lower low under June. So I think that if we were going to get stalled on a corrective bounce towards the 4,200 region and then start dropping down hard towards new lows and break that June low, that from there we might turn into a vicious feedback loop, and maybe that gets support in the 3,400s and then gets a corrective bounce and then really pukes. But I would cease to be bullish on most of the market at that point. Doesn't mean that some charts won't try to make new highs after that, because they might still have held a valid fourth wave. But most of the things that we look at, if that June low breaks, are not going to survive longer term, or they're just going to be really ugly and unreliable. So let's zoom in on the smaller degree structure on our SPX chart. I'm going to zoom out enough that we can see the entire projected move for our primary wave 5. I'm going to scoot this back out a little bit further. Wanted to take, usually, if this is all of our wave 2 already, and we're not getting a fifth wave up and then another wave 2, then on one hand, this parentheses wave 5 is happening faster than we initially planned. But if it has morphed into an ABC up for wave 1, and we're going to get an A, B, C move up for the third, then that as a diagonal can stretch things back out a little bit more and still take more time to fill out. Our A wave of the third, we want to see that come close to the 44.35 region. That's the 0.764 fib extension. That gives us at least a good chance of getting to the 1236 at 4800s, and ideally closer to the 1382 still at the 4938.52 region for SPX, based off of the low that we struck yesterday, which was right at a 618 retrace. We know that most A waves are themselves ABC moves, so this circle lowercase a wave in the ABC of 3 should itself be a 1 degree smaller ABC move, and that's designated with the Elliott wave nomenclature for the minuet degree as a lowercase parentheses a, B, and C. And then inside that A, we probably want to see an ABC move as well, although once you start to get smaller, the smaller you go in degree with Elliott wave, the more potential there is for variability. And one of the things that we do know is that A waves can be either 5 waves up or 3 waves up. So the smaller we go down in degree, and we're still dealing with A waves, there is a chance that this just gets a strong 5 wave up move towards the 4200s, and then holds a more shallow retrace as B wave, and then another 5 wave up move towards the 4400s to fill out that A wave. So we have to, that's why I have the smaller degree inside there, I have shaded a little bit more, because this can be an ABC move as well. It doesn't have to be 5 waves up. And I think that is really where a lot of the frustration and animosity that people seem to have towards diagonals comes from, is that since you're dealing with an ABC move inside those motive or advancing waves, you don't get the same reliable structure that you can say, all right, as soon as I see 5 waves up and 3 waves down, I know that it's a change of trend in the right direction that I want to go, and I can jump on that trend. Initially, particularly if your A wave is going to be made up of an ABC and that A wave is going to be an ABC, then there's a lot more opportunities for deeper retrace than you would get in an immediate impulsive 5 wave up advance. But here's the really cool part that I wanted to talk to you guys about a little bit. If this is Avi's B wave, like his red count, where this is an A wave down, and we're looking for a B wave bounce, and then a C wave down that might make a lower low. That red B wave that Avi has is also looking to be an ABC move up. So maybe we can brighten up this ABC, because even if we're looking at Avi's more bearish count as a red B wave, we're looking for an ABC move up for that. The other thing that's really cool is that if this is still a 4th wave, even though it got deeper than ideal, and so deep that it actually hit an ideal 618 retrace as the entire wave 1 and wave 2, but even if we're going to say that this is still a 4th wave, then the 5th wave of that diagonal should also be an A, B, C move up. It should get to anomaly higher high, so maybe the A wave, if this is that green, would be a little bit higher. The B wave would hold a little bit higher, and then the C wave gets a little bit higher, and then all of a sudden that can count as a green 5th wave of that wave 1, and then we get an ABC retrace again. So one of the cool things that I like to look for, I try to minimize the amount of alternate wave labeling that's on my charts, because I want to avoid as much confusion as possible. But when I do put some alternate potential there, I try and look for those opportunities where the alternate counts overlap. So we're looking for almost the same structure up towards the 4200s, and maybe that stretches further towards the 44, 4350 region as this wave 1, or still just this A wave. And then we're looking for a retrace from there in the more bullish count as part of a larger ending diagonal. We would like that to hold as an ABC B wave retrace in the high 4,000, 4,100 region, and then head up again from there. But that gives you an idea of that potential overlapping structure, even though between those different counts. Now, what I want to focus on a little bit more is the potential for the NASDAQ. Let's go here, let's go to NQ. Nope, wrong. This one? Nope. Oh, this one. There we go. The potential for the NASDAQ to squeeze in 5 waves up. So instead of the NASDAQ, I'm going to hide this fib measure, instead of the NASDAQ counting an A, B, and a C wave up, which that's a valid count here too. This could be A, B, and then 1, 2, 3, 4, 5 of the C wave, and then an ABC for wave 2, just like we were looking at in SPX. But this move at the beginning of August is a little bit more pronounced in the NASDAQ, even more pronounced in the equal weight NASDAQ, and far more pronounced in some other tech names, in particular the semiconductors, where it counts as the fourth and then a small muted fifth wave that we're looking for. So we got the ABC up that we wanted to see for the wave 3. Then we didn't get much of a retrace, but in the NASDAQ, we got a little bit more than the S&P, and that can count as a small ABC for the wave 4. Then we can get another ABC up for the wave 5 and squeeze in 5 waves up for this wave 1. So that allows the parentheses wave 5 in the NASDAQ to still more easily just be a regular old run-of-the-mill impulse. And that means that instead of looking for, I'm trying to find my fifth, here we go. Instead of looking for an ABC up for this minor degree wave 3 of the parentheses 5, we can just look for a regular 1, 2, 3, 4, 5 wave move that's going to give us nice Fibonacci pinball, which means that our wave 1 of that 3 should target the 13,625 region, maybe even a little bit higher, possibly even a nominal higher high, closer to 14K. But as 5 waves up and 3 waves down to start a more significant, clear, impulsive trend change. And then we can fill out the rest of that parentheses wave 5 on into, well into 2023. So I like this a lot. As I said, the QQEW is a little bit more pronounced. It counts better as an expanded flat, but much more clearly ABC for the A wave, 5 waves up here for the C of 3, and then that expanded flat for 4, and an ABC up for wave 5, and then a retrace that came to just below the 618. And I know we don't normally look at it, but I'm going to show you guys that SMH chart, the semiconductor ETF, where that 4th wave is more pronounced. We got a 5th wave up. This actually counts as an impulse. It doesn't need to be a diagonal. And then an ABC retrace. This one came a little bit deeper than ideal to the 764, but certainly valid. Looking for the 3rd of the very, very strong impulsive parentheses wave 5 to start very soon, ideally getting to close to the 240 region as that wave 1 of 3. I no longer despise the RTY chart. It actually looks really good off of the low and fits with not actually that many small caps that we see. A lot of the small caps we see look more clearly like 5 waves up and 3 waves down, or are holding a higher consolidation as a 4th, should get a 5th and then a wave 2. But there are a lot of charts that Garrett and I see where this larger primary wave 5 off the March 2020 lows looks more like an ending diagonal. And that means we have an ABC up for wave 1, we have an ABC up for wave 3, we have an ABC for a deeper wave 4, and we should be getting an ABC up for the 5th wave to one more all-time high. And inside that potential for the intermediate degree 5th wave as an ABC up, we have really, really nice subwave structure here that fits very well as the A and the B inside that A wave of our minor degree ABC up. And that gives us a very, very proportionate move at all of the degrees. So we have a 100% move for our C wave. Maybe it gets up closer to a 1, 2, 3, 6. But normal proportions there. Fill out a perfect A wave. We get normal proportions from there for a B wave. And then we can get normal proportions up for that C wave to get to closer to the 2800 region. So that fits very, very well with a lot of individual names that we see, not necessarily small caps in general, but also this. I mean, it could certainly be the 4th wave still of a leading diagonal, but deeper than ideal. And, you know, this to me is the more simple count. It's just an ABC up, an ABC down to a 618, and set up for a measured move that fits with the larger degree. So we do like that a lot. And a lot of things have moved up enough off the low, even though we don't have a clear 5 waves up and 3 waves down yet, as the parentheses, lowercase Roman numeral, right, wave 1 of the C wave, for example. But at this point, it would stress a lot of patterns now to break the lows that we saw yesterday. So looking good off the low, we want to see it hold higher lows if it gets any retraces, and then continue to give us, on this one, we should get 5 waves up. It would be, I mean, C waves can be themselves diagonals, but here, 5 waves up towards the 1930 region would be the most ideal. A normal retrace for wave 2, and then the third can target up here close to 2100, normal fourth, and then a 5th wave up close to the 2200 region. All right, I guess we can look at the Dow. I haven't changed my labels on the Dow, but we are under a 618 retrace as the 4th wave. That doesn't mean that it's not valid. That's a 786. And maybe this is still the better count on the Dow of getting a 5th wave up of a diagonal and then getting another consolidation pretty much just like this as the wave 2. But easily able to just count this as the 1-2 of the ending diagonal. And those of you guys who know my color coding guides, I will often make my diagonal structures blue to emphasize that those are diagonal structures. The problem here is that this wave 1 was supposed to be a leading diagonal, so that's why I have the subwaves here of the ABC in blue, but I'll make that gray to match that, because so that this can stand out a little bit more. So that would be the structure that we're looking for in the Dow. Still targeting up towards the 40,000 region for this 5th wave, but just likely to be an ABC move up towards that 37.5 region first, and then a deeper 4th wave. Oops. Like that. And again, if this is still trying to get the 5th wave of a leading diagonal, then this would also be an A, B, C move up to a nominal higher high in the 34,300s, and then retrace that again as a wave 2. So could certainly still see that happening, but you also have a nice potential inverse head and shoulders forming here off of these lows. So a lot of good potential for at least a shorter term move up, if not that being the start of the A wave of our third. And a lot of the difference between that of being able to tell which it is going to come down to the timing as well. This 5th wave of wave 1 should fit more within something that looks connected to this move off of the June low. Whereas if we're starting the 3rd, this can be a little bit more drawn out, so that gives us a longer term swing up as our ABC up for wave 3 in that diagonal structure. All right, I think that is probably going to do it for the broad index charts. Let's move over and talk about metals. Starting with gold. All right, let's zoom out to, I think this is a good chart here, to the big macro. So we are trying to hold a very deep retrace as a 1-2 at the minor degree in a start to an intermediate wave 1 of a larger primary wave 5 off of that July low. This is a little bit compressed. This is kind of stretched out for a 5th wave, and this is a little bit compressed for the 1, 2, 3, 4. So it is possible that this is 1, 2, this is 3, and this is 4, and we're going to get a lower low into the 1660s to 1640s as a 5th wave down as an alt lower low. So certainly at this point, if the 1700 level breaks, there's a much greater chance that we see closer to 1650 or a spike a little bit lower than that. But as of right now, trying to hold 5 up and 3 down, even though it's deep, as this 1-2 start to wave 1 of the larger parentheses, the larger primary wave 5. So when we zoom in on the structure, let's go to a 2 hour. I think we can probably see the whole thing, but just with more detail. So this is what we're looking for the rest of this wave 1. We have 1, 2, 3, 4, 5 waves up and a deep WXY retrace. And then we have a small 5 waves up here, which should be the 1 of wave 1 of this minor degree wave 3. So want to see this fill out more as 5 waves up closer to the 1780s, and then hold a higher low close to 1750, and then get us to 1900, and then hold a retrace, and then up close to the 1950, 1975 region as the rest of that wave 3 would be ideal. We could call this an ABC up for wave 1, and then look for an ABC move for wave 3. But I would like to try and get this wave 1 a little bit closer to 2000, which a diagonal could still get pretty close to that as well. But right now, we're just looking to see if we can get some continuation off of the low last night at 11 or 12 a.m. As this third of wave 1 or of the A wave inside that 3. Next, we can look at silver. I don't have as much detail on silver because it is just not as clear of a chart to me yet. It is not holding the low from July. It made a lower low already. And that lower low can count as an ABC down for a Y wave of a larger potential primary degree wave 2. But I'm just waiting to see if we can get more structure off the low, similar to what we're looking for, at least at this point, with just a wave 1. Give me 5 waves up for wave 1 of this wave 1 in silver, because it couldn't hold this one. So while there is potential for silver to be more bullish than gold, and I have talked about this before with regard to my silver to gold ratio chart, we can be coming into a pretty extreme top in the relative values of gold and silver. Get a little bit of a fade here, then maybe one more high in the 4th and 5th of the C wave of B. But we have retraced 61.8% of this initial move down from the in the ratio chart from the 2020 extreme that was hit. I don't know why that's not snapped in place. I'll have to fix that later. But this doesn't necessarily mean that the gold is going to go down and silver is going to go up. It just means that if they go up together, silver should be outpacing gold over the next year or so on any move to the upside. Or I guess they could both go down and silver just goes down a whole lot less. But there is not a lot of clear structure off of the more recent low yet in silver. Moving on to GDX. GDX at a larger degree, we are trying to look for confirmation of a bottom of this large B wave, this intermediate degree B wave, and that is inside a primary wave 3 of a larger diagonal. So we have to count this very large WX and then an ABC for a Y wave. We dipped just under the 618 retrace there. We're looking for 1, 2, 3, 4, 5 waves up as the C wave, although probably a little bit smaller wave 1 at this point. That third over. There we go. That looks a little bit more proportionate. And then I have talked a little bit, I think I posted on the main site too, or maybe it was just saved for those in the metals, mining, and agriculture service. But I see this nice potential to fill out some symmetry as an inverse, a couple of different nested inverse head and shoulders. So if we get 5 waves up, 3 waves down as a 1, 2 of this wave 1, and then we get the 3, 4, then we get another inverse head and shoulders, and then we get the rest of that wave 1 and wave 2, we get an even bigger head and shoulders. So a lot of cool potential there. So far, only a tiny little 3 waves up though. I count this very, very complete to the downside as the A, B, C of a Y wave. So it's a little bit of a different count than Avi. But we do only have 3 waves up, so this could easily make a lower low, even just as an extension in the count that I have. But I do like how this dipped a little bit under the fib fan in the 618 and is trying to turn up pretty strongly. There's a lot of individual names that are kind of at a last level that needs to hold. That they don't have as much room for a lower low down towards the 21s that GDX does. GDXJ is pretty much the same at the larger degree. It did make a lower low already, so we could just move this C wave of the B, C wave of Y of the B wave over a little bit. Again, it has room down to 2566 for a lower low. Would like to see 5 waves up and 3 waves down as a 1-2 fill out more of this inverse head and shoulders on this chart as well. Let's move on to oil. The oil chart, I was counting this as this very, very choppy diagonal off of the March high, an A, B, and then this is a chopping ending diagonal for the C wave. And it's still filling out that count. I did add the orange as a potential alt where, you know, this might have been an A, B, and trying to fill out, or maybe this is the A and the B of a C wave. That actually allows for quite a bit lower for that third, and then more of a bounce for a fourth, and then moving that C wave over in orange. But when I was talking with Garrett in a thread in the market section earlier, he was contrasting the oil futures with the actual USO chart. Well, sorry, I should say that differently. He was contrasting the USO chart with the actual futures, and USO actually fits closer to the way that we're counting most of the individual energy names, where this was the top of a third, and this is an A and a B wave, and they're getting a C wave down and a fourth. Now, this doesn't really count as the top of a third in crude oil, but maybe instead of a B wave, this is an X wave, and this could be an A, B, and a C of a Y wave to the downside. It's a very stretched and extended move relative to the initial move that crude oil got off of the March high, but a lot of those energy names did make substantially higher highs from this April move into June that we were looking for as an ending diagonal for the C wave of a third, and now they're starting to turn down in the C wave of a larger fourth. So that actually fits very, very well with the price action. It's not something that you could have looked at initially and said, this entire move down is just the A wave of a big Y wave. But when you contrast it with the USO chart and how that fits with all of the actual energy names, that does make a lot of sense. So instead of this completing an A, B, C for a fifth wave and looking for a major reversal, I'm very, very open to this being a 1-2, and this is now in the middle of the third that stretches further down towards the low 70s and then gets a fourth and a fifth wave of that purple C. So I do like that a lot. Garrett's going to be following that more closely on USO because it looks a lot cleaner on the USO chart than it does here. But even here, it fits very, very nicely with our energy charts. Next, we'll take a look at natural gas. I really hate this chart. I don't hate it. I mean, it did everything that I wanted it to do. We're looking at this as a possible larger diagonal. It filled out this running flat for wave 2, gave us an amazing move up as an ABC for wave 3. Then it gave us a really, really nice retrace into the December-January low, and then gave us a really clean, ideal structure with this first ABC move for the A wave, the deep retrace for B, a clear 5 up, 3 down as the 1-2 of the C wave, and then gave us a nice extension beyond where we wanted to see it top, or where it easily was 3, 4, 5 topped. Then it held as a wider flat and gave us a better fifth. So it did everything that we wanted it to do. So I was pretty much done with natural gas. It looked like a pretty strong reversal. This looked like a good A wave and a B wave, and we should have gotten a C wave up that should have topped in the 8 region and then turned down again. And instead, it got more extension, actually made a nominally higher high here, and then made a nominally higher high again. So it doesn't really fit into anything reliable that I can see bullish. And it's not doing anything reliably bearish either, although it's gone way too high than it should have, and now it's turning down from that, but not in any kind of clear, reliable structure that I see. So I'm pretty much ignoring natural gas because I see this as a major top, and then this is just GORP. All right, what do we usually go on to cover now? We talked about metals. We can talk about copper. Because I do really, really like the copper chart. We've been highlighting this a lot in the Metals, Mining, and Agriculture service. This was a little bit ugly data here in that August 22nd to 24th, 25th. I'm not really sure exactly where to place the top for that B wave, but I do think we have a solid 5 waves up as wave one of a larger 5th wave. So looking at this getting 5 waves up into the 450 to 460 region into the end of the year, and that should be just minor degree wave 1 of a larger parentheses intermediate degree wave 5 starting. But zooming in, we have really good structure also off of this nice ABC expanded flat to a 618 retrace after the 5 waves up from the July low, and have a nice reversal from there, another nice little wave 2, possible micro 1-2 start to the 3rd, and this is still looking on just the minuet wave 1 of our minute degree wave 3 that ideally targets the 425 region. So do like that a lot as well. Let's take a look at, first let's look at the dollar. Posted this chart earlier this morning. That this was looking like a small degree ending diagonal. The dollar is incredibly overextended. Maybe not so incredibly, but very overextended. But at a small degree off of the end of August, this was looking like an ending diagonal. Could count as 1, 2, 3, 4, 5, hitting the top of that trend line. And looks like it has reversed nicely since I posted that this morning and dropped under that lower trend line. So that should be a pretty good indication of a reversal, at least at this smaller degree, and get a retrace down towards the 107.60s, which we know when a diagonal completes, the first region of support is usually that starting point of the ending diagonal. So that would be a move down towards about here, as long as we can stay under, say, like 110.2. At the larger degree, I see this as a big ABC up complete from 2018, and that completes either a primary degree wave 5 of a C wave or just this cycle degree wave 5 of a larger potentially leading diagonal, which would be very, very long-term bullish for the dollar. But if this did complete a very large 5 waves up from 2008, it needs a very large 3 waves down before it is a long-term buy again. That doesn't mean we can't look for good bounces to play to the upside, but I think a lot of the things that we follow that are priced in dollars might benefit nicely from some near-term dollar weakness for a while. Certainly, maybe the metals and other commodities priced in dollars might benefit in many ways, as well as potentially emerging markets. Not that we look for any direct correlations. All right, now let's go on to look at some bonds. Before we look at TLT, we'll look at the actual 30-year bond prices. This is, for some reason, I don't have ZB. I have @US hashtag, which is the continuous contract for the 30-year bond prices. We made a lower low, but we did not break the 100% retrace. Looking at this as an ABC move up, there were a series of measured moves that we were looking for. We had 3 waves up and then a 3-wave retrace. We were looking for a measured move up for a small C wave. We got that. We got another retrace. Then we were looking for another measured move. We got 5 waves up as another measured move. Then we were looking for a retrace. Then we said that looks like 5 waves up, 3 waves down off of that B wave. We should get the rest of 5 waves up as a C wave. We got that. Then we were looking for a retrace, and we got an A, B, C move down, and then we got some extra, and now some extra again. So we didn't get a clear 5 waves up off of the low. Still don't have 5 waves up off of this low, but this is kind of a must-hold region where if it can't hold here, even though B waves can be expanded flats, this B wave should not, because this B wave should really be part of the start of an A wave of a bigger cycle wave 5. So this could, when we looked at the 10-year, there was the potential that this was 1, 2, 3, 4 and getting a 5th wave down. But that does mean that, if this is getting a 5th wave down, it could drop to a lower low and then reverse pretty strongly from there. But if you're going to treat this as a B wave, then you have very, very good risk reward, because you can have a tight stop at that 132 level. Looking at the 10-year, and then from the 10-year, we will go on and look at the blend of the 20, of the 30 and the 10-year, which is TLT, as an ETF. And again, we were looking more on the 10-year here, that this could have been, instead of an A, B, and a C wave for this Y, this could have just been a C wave itself for the cycle wave 4. And so this would be 1, 2, 3, 4, and getting a 5th wave down. If that's the case on TY, though, we should be at about an A wave of that 5th and get a B wave bounce towards about 118, 119, and then get a C wave down towards 111. So also not quite as low, close to that June low in TY as the US is. So certainly good potential for at least a bounce towards the 119 to 120 region. Now looking at TLT, that's not the right chart. There we go. TLT did break the low. So this is less likely a constructive ABC as the start of something, although it could still be an expanded flat ABC for a wider 4th. But more like TY, this can be that A wave, can get a B wave bounce, and then a C wave down for that yellow parentheses wave 5. Any other questions, guys? I don't know if I'm missing anything that we usually talk about, but I kind of ran out of things to talk about. And my throat's a little scratchy. All right, well, if there are no further questions, then we'll go ahead and end here, and I will see you guys next time. Have a very good night. All right, I'll get this saved and uploaded. Thank you all.